If you're among the 44 million households that are renting, I may have some really good news for you. Greetings, good people. Dietric Williams, realtor with Compass, Baldwin Hills, California, and welcome to another edition of Info on the Go, the show where I give tips, tricks, and insight on how to buy, sell, or invest in real estate in Southern California. If that sounds like something that you're interested in, please make sure you hit that subscribe button and tap that bell so that you're notified every time I upload new content to YouTube. Recently, Fannie Mae announced that it would be making changes to its automated underwriting system. Now, these changes, which take effect on September 18th, will help some renters who normally wouldn't be able to qualify for a mortgage qualify for Fannie Mae-backed loans if they've been making their rental payments on time and consistently. For years, many renters have believed that they'd be unable to afford a home because of insufficient credit. About 20% of Americans have very little established credit history. And for renters, less than 5% of those get credit for the rental payments that they make on their credit reports. So this is really an attempt by Fannie Mae to level the playing field for home ownership. About half of those who are renting are classified as unscorable, or they have subprime credit scores, which makes it difficult to qualify for a mortgage. You remember the housing crisis of 2008? Well, that was really spearheaded by subprime loans. Fast forward several years later, we rebound out of that, but you can see why many lenders don't do subprime loans anymore. Now, I'm not gonna get into anybody's finances or discuss why so many people got subprime loans or had subprime credit, but if somebody who I would say was affected by that back in like 2011 has consistently and steadily been making on-time rental payments for the past decade, why should they be penalized for something that they did over 10 years ago? So I really think that this is going to be beneficial for millions of families out there who are suffering because they have thin credit history or maybe have made some mistakes in the past, but they've corrected those mistakes today. According to the CEO of Fannie Mae, this is probably going to be the first example of a large-scale automated mortgage underwriting system that taps into electronic bank statement data to consider a person's rental payment history. The caveat to this is that those who are applying for a mortgage and want to take advantage of this have to opt in by granting permission so that the rent payments that they make will show up in the rent history of their bank account statements can be identified. Now, that's whether it was paid by check, whether it was paid through an online portal or some other digital type of site. Here's a key piece to this. Consistent rental payments will vastly improve a person's chances of qualifying for a loan. Yet, missed payments or inconsistent payments won't necessarily disqualify somebody from being able to receive a Fannie Mae eligible loan. That's huge for many families out there who fell victim to what was happening during the pandemic, where they were missing or making late payments on their rent. Side note, we may see a lot of evictions pop up as the Supreme Court just recently ruled that the extension of an eviction moratorium would have to come from lawmakers and not the Biden administration. So it's going to be interesting to see what happens, whether some of these landlords will report those who are being evicted to the collection agencies, which would show up as a collection account on their credit reports. That could be a double dinger, right? So this whole thing about using rent payment history to help boost your chances is going to be interesting to see how that all plays together, but we'll just keep our eye on that over the next several weeks or months. Now, back to the Fannie Mae rule. I want you to keep in mind that this change has not been instituted by Fannie Mae's competing agency, Freddie Mac. While both of these institutions are similar in terms of what they stand for by supplying stability, liquidity, and affordability to the housing market, there are some distinct differences between the two. One of the differences, or the primary difference between the two, is that Fannie Mae sources its mortgages from large institutions, large lenders, while Freddie Mac buys its loans from smaller banks or smaller lenders. So it's important that you recognize the difference between those two and understand that there are going to be different loan requirements for each, and you have to decide whether you would like your loan to be serviced by a large or a small lender. It's really up to you, but you really need to know that piece. That being said, Freddie Mac is working with the financial tech company called Isusu, which has developed a technology platform that reports rents directly from property management companies to the credit bureaus. So I would expect to see that roll out sometime in the near future. Again, that's going to give a lot of you who are renting leverage when it comes to buying a house. So that's the good news that I have for all of you who are renting out there. If you think this is going to be detrimental or it's going to be beneficial to the housing industry, please leave me a comment below. I'd love to hear what you guys have to say. I thank you for watching, and I'll see you again next time.